Welcome back. You're watching Your World at 10. Now, it's been an interesting 10 days of economic data. Inflation continues to edge up, but we've had strong IIP data come in, and earnings season is on course. Joining me tonight to talk about the economic state of affairs are KV Kamath and Bharat Doshi of M&M. That is, Mr. Doshi, as you know, is also president of the Bombay Chambers of Commerce and Industry. That's the BCCI. And both Mr. Kamath and Mr. Doshi join us from the sidelines of BCCI's Foundation Day celebrations. Gentlemen, thank you very much. Sorry for pulling you out of the celebrations, and I'm really sorry there is a lot of noise and chaos around you, but it's great to be able to talk to you. Mr. Kamath, let me start with you by getting your opening reaction to the pretty fabulous set of IIP numbers that we've seen earlier this week.
Well, you know, I have always maintained that the challenges that India faced, as distinct from what challenges the world faced, would be a 6 to 9 month phenomena, because the underlying drivers for growth were always there. And I think it's now bearing out to be right. Indian industry clearly took the shock of commodity price correction over the last 6 or 9 months. And this is the first full quarter where you're seeing Indian industry coming back strong. And, you know, I would say the demand driver that were in place is now fully taking effect.
Mr. Doshi, what's your view from a manufacturing and industry point of view of the IIP data?
Definitely, it is very heartening. We had actually seen the effect coming in the first quarter itself, but the second quarter coming this strong gives a belief, as one says, that the parameters around are in place. The consumption demand is picking up, and there is only one worry as to what can go wrong if the commodity prices go wrong, because today the demand is sustaining at benign commodity prices. If things change going forward, this will be a real challenge.
Mr. Doshi, I'm going to come back to you on the auto sales issue, but Mr. Kamath, first, I'd like your view on what impact this IIP data is likely to have on interest rates. Just earlier this week, C. Rangarajan, the chairman of the Prime Minister's Economic Advisory Council, said that he sees the RBI maintaining its accommodative fiscal policy for some time. He added that the RBI is likely to tighten liquidity only if inflationary pressures mount further. Inflation continues to hike, up every week as the numbers come in. What do you make of what impact this will have on interest rates? Do you expect a tightening faster than anticipated, maybe even before the end of this year, or early next year or later next year?
I would think that, if you look at the global context, I think monetary policy is in an easy state. And I don't think that the liquidity situation globally is going to change. Now, in India, we have also a similar situation where liquidity is very easy at this point in time. Now, whether to tighten rates or not, in the global context, given the sort of growth rates that we are seeing in most economies, I do not think we will see anything happening for the next 9 to 12 months. I would expect in the Indian context for us to be slightly ahead of that curve and start the tightening process maybe sometime early next year. But up to that point of time, maybe for the next 6 months, I really do not see too much of tightening, and that should provide the sort of momentum that we require to move back onto the 10% growth track. And I'm clear that the 10% growth track is achievable.
It's achievable, according to you, sir, within the next year itself, because not only are we talking about rates potentially going up faster than we anticipated, but as you mentioned, in the first quarter of next year, that rates could move up. We're also seeing considerable volatility on the front of the rupee, which is hurting many of our large exporters in many ways. So how do you put all of that together?
I would agree with you that the rupee is going to behave in a rather volatile manner. But I would also remind myself that, we had seen the rupee, breach 40 some time back. So I think Indian industry has, come of age and will learn, and has learned rather, to deal with these volatile rates. I mean, it's not that we would want volatile rates, but I think business has to learn, and has actually learned these lessons over the last, I would say, 2-3 years when we built up our competitiveness. So on that part, they will learn to live with it. I would be more worried, rather than interest rates, of liquidity being squeezed out of the system. And as I said, I do not see it happening just now. But if we are to sustain 10% growth, we will need to keep the system liquid and the rates attractive. And I think industry will learn to deal with the exchange rate.
All right, Mr. Doshi, that links in perfectly to the point I wanted to make with you about auto sales. We've seen pretty good numbers come in the last couple of months, but really, how long is this party going to last? Because if interest rates do go up faster than we anticipate, maybe even by the end of this year, despite what Mr. Kamath is saying, how is that going to impact consumer sales? How is that going to impact the auto industry? And why just the auto industry? How is that going to impact industry at large?
Today, consumer credit is available. If it becomes costlier, there is a direct impact on auto demand. Now, what one could see is, and that's why I was very cautious, that assuming that the commodity prices remain benign, which one hopes, and as we explained earlier in the round, that in view of what is happening globally, in view of Europe and US and their demand being much less, you will find the commodity prices should remain at that level. On the other hand, because we have seen in the past volatility on this front, and what one saw in 2008 and sudden increase and then drop, one is never sure as to what could happen to oil prices or commodity prices in a very short span of time. So we have got to get used to cycles at very short span of time. If something like that happens, and if at the same time to control inflation, the policy on interest rates is much tighter interest rates, it can have an impact on the demand.
How do you hope to be able to negate that, Mr. Doshi? Because it seems, at least all the signs seem to be pointing towards interest rates moving up faster, right? Whether it's inflation or commodity price increases or the falling dollar, all of that seems to indicate that there could be interest rate hikes faster than we expected. So are you saying that we need to then get used to the fact or face the fact that whatever little recovery we've seen in growth over the last 2 or 3 months, that is most likely going to get dampened?
At this juncture, it's a question of choice. And if I was to give my view, I would say that one should not harden the interest rates too soon right now. The economy is recovering. The stimulus should not be withdrawn. Interest rates should be allowed to remain at the current level and wait for the next round when we take a view.
Would you agree, Mr. Kamath, that the monetary policy announcement at the end of this month is most likely going to be a non-event and that there will be no changes in rates at all?
I would think that I would agree entirely with what Bharat has said in this context. At this point in time, given the liquidity situation in the country and the global context, I think, and at this point in time, the demand pickup in terms of absorbing the liquidity that is in the system is just not there. Given this, it would not really be afraid of interest rates at this point in time, because interest rates will continue to be low for, I would think, the next 6 months or so, before you see demand and then maybe tightening. All these things are coming in and raising and putting pressure on the interest rates. But at this point in time, I would think interest rates will remain where they are, and I would say that we are on track for the growth targets that we want for this country.
All right, Mr. Kamath, Mr. Doshi, one final question to both of you. Mr. Kamath, starting with you, and that is, what do you make of the run-up, the rapid run-up that we've seen in the Indian stock markets in the last few months, and the rush of corporate fundraising that's taken place? We had Deepak Parekh on the channel last week, and he expressed concern about the markets running ahead of themselves, running ahead of corporate performance, and he was also worried about a few of the kinds of realty companies, actually, that are raising money. Mr. Kamath, what do you make of it?
Yeah, I think corporates raising money in the marketplace, in fact, I would actually welcome it, because we have to raise, I think Indian corporates should be encouraged to raise equity when they see opportunity. They have seen an opportunity and they have raised it. Now, some sectors might have raised more equity than others, but I think this will level off. I think at this point in time, we need to see corporates raising equity. Your question whether markets are running ahead of where they should be, I would agree that they are probably running a little bit ahead of where they should be. They are probably projecting that we are already on to the next level in terms of the growth track, and probably factoring in the earnings that would come from that level of growth. But at this point in time, I think the market is slightly ahead of where it should be, given I would say the economic conditions in the country.
Mr. Doshi, last word to you. Do you also agree with Mr. Kamath that the markets have outpaced themselves, or do you find comfort in the fact that finally there is a large enough window open for India Inc. to be able to raise money?
Well, definitely, as one sees it, first of all, the markets are identifying, and sometimes one therefore calls that the market is the right barometer, that they are seeing the factors as all positive and therefore the markets are where they are. And if that is the window of opportunity, then for India Inc., for their next phase, instead of waiting till that phase arrives, trying to raise resources now for that next phase does make sense completely.
All right, Mr. Doshi, Mr. Kamath, thank you so much for your time. Sorry for pulling you away from the celebrations. That was Bharat Doshi and KV Kamath on Your World at 10. It's time